Hey guys, welcome to another video brought to you by Total Control Traders. Alright, this video is for weekend market deep dive as well as hottest tickers. Let's get right into it. Alright, think back to a year ago. What a crazy ride it has been, eh? A year ago. That was right here. Exactly a year ago. Okay? Market made new highs a few days later, followed by the pandemic crash. From there, our recovery has been nothing but amazing. This has been one hell of a ride for all those of you that have traded through this. 2020 is definitely a year to be remembered. Okay? I mean, excuse me. I mean, look at the drop alone, right? The drop was 35, nearly 36% drop in 24 trading days. All right. Then from there, it took us 102 trading days, about 107 trading days to break even, back up to the top. Then from there, made new highs. It's been one hell of a ride in the market. So keep that in mind and know that the ones who, with the condition of the market right now, understand that if you're bag holding, if you're playing bulls, the likelihood of you seizing the opportunity when the bottom is in or when the consolidation ends is less likely, because by holding your bag, playing bull, you will become a little bit more hesitant on entering when the opportunity presents itself. So understand that, and that's why in my chat room I have been really emphasizing on make sure you're playing with a hedge. I think it was started somewhere around back here. Didn't call it out. Didn't call. We're not in the market to call out the top or the bottom. We can only look at what the information is provided to us and make a best educated guess. You can never nail the top. You can never nail the bottom. So I started calling out, cautioning members as well as in my videos that you want to be looking at hedges. Now let's take a look at that. You see that how this yield curve, VIX curve, have completely inverse now. What this looked like before, I'm not sure if I can, nope, 3 months? Yeah, I gotta play around with this. Anyway, so before the most recent events, this was more like a curve like this, going up, then flattening out. And that's why one of the reasons why I cautioned everyone to make sure if you're playing bull positions, start looking for hedges. Especially up here, when we broke the wedge and then we got shut down. Now, by playing hedge, there's a few ways to do it. You can either do puts or you can do VIX, volatility. My personal preference is VIX, just because if you look at VIX, and this is why I cover it as well, we've stayed on a easy entry spot. Okay, every time it comes down to this 20 to 21 range, that's a buy. And look how it has worked out in the last few days. There's been a 77% run. And depending on which ticker you play, it could be VXX. VXX has had a 35% run, or UVXC. And UVXC is a hedged two-time, I believe it's a two-time hedge. So the payout makes sense that it's a little bit higher. the UVXE has raised by 50%, nearly 50% in the last few days. So just by having these hedge positions alone, it's going to be really easy for you to, when something happens, something dramatic happens in the market, it's going to be really easy for you to see a profit. The only thing with it is it requires enormous patience to play VIX, because as we can tell, as we can see here, we went sideways for how long? Went sideways for 52 trading days. That's more than 2 months. But when it pays out, it really pays out. So just wanted to quickly point that out. All right, let's get into SPX. We've been in a clear daily high trend, very clear daily high trend, except for this one, this particular ticker, or this particular lower wick. We can see that it made a lower low versus the previous higher low. However, it was a wick only, got immediately bought up, and that's why this particular part of the chart was not a cause for concern for bulls. But when we saw this candle 2 days ago, we did not get immediately bought up, and the key word is immediate. Okay, we did not get immediately bought up, and we did hit that 1-to-1 extension target that was traced from this clear higher low to this clear higher high to the following higher low. Okay, 1-to-1 extension target hit, rejected four times. Then from there, did not see a clear buy up. The following day, Thursday, we saw a clear buy up, but we closed the day with a huge upper wick, closing it well under the 88. Now today is the confirmation for me personally. Again, a rejection from the 88 with notable bear volume, closing on the GP, very slight close under the key support area. Okay, and actually maybe this is, let's take a look. 3704, no, closed right on the support area. Now GP is key to hold. Okay, although the previous key to hold was back here, we clearly lost it, and now we're clearly seeing a trend reversal. So another thing to keep in mind, guys, is how long we've ran, and I cannot emphasize this enough. 60 straight days of bull before bear showing up. Just as a comparison, this last run was 58 days of bull. Then from there we went into a long time sideways action, 47 days. So know that this is a very, very possible scenario. Now that the pullback has begun, regardless of the cause of it, again, stick to the chart. Don't get distracted by the noise. Doesn't matter what the news are or what the cause of the event is. The chart alone will tell you a story. The chart alone will allow you to trade a little bit less with a little bit less emotion, and technical analysis works. Okay, we look at this, it's similar time frame wise on the run. Now we're gonna be looking at a pullback that's a little bit more significant than what we are already seeing, especially with the bear volume that's coming in. I am anticipating a bit further downside, but if you are still in bull positions, that's okay, because you're bound to give some back. You're always going to give some back, because you can never nail the top, right? But if the GP breaks, this is the key zone to hold. if the GP breaks, which I am anticipating that it will break below, make sure to have your stops in. Okay, next zone below that we're looking at is 36.33 to 36.51, which is a key. You can clearly see rejection, rejection, rejection install, then broke over and became support and bounced from below it again. So key zone to hold, or next key zone to hold. This is a notable level because it is previous high. Then from there, personally, I'm more so watching this zone, the 35.41 to 35.88. Yeah, previous high 35.88.8. And this zone makes sense to me because if you were to run a FIP from the low, let's just draw it for you guys. From the low of this run to the high of this run, we can see that the 0.5 lines up with the zone. So even if we were to, our consolidation were to pull us back to the 0.5 of this run, 0.5 bounce is still a strong bounce. So overall, I am still looking for the market to go up. This is a little hiccup. Not a hiccup, but it is needed. It was needed on the weekly. Okay, so if we were to look at the weekly chart, we can clearly see that there has not been a significant higher low. It's just been a run, a straight run. The only potential higher low was back here, that big wick that got bought up immediately. It came back to touch the weekly 8, but with that kind of wick, I don't know. I don't know if that's gonna be considered a higher low. I don't think so, because with a higher low, you want to see a real body, more like something along this line. You can clearly see that there's been a little downtrend, and then that's a higher low. Same here, a little downtrend, that's a higher low. Okay, on the weekly, there's been none. Now we're just about to set that weekly higher low. So let's say that even if we were to set the weekly higher low and we bounce from the 0.5, chart is still extremely strong, and this spot makes complete sense for us to bounce from, for us to revisit, even just to revisit. Look at this. Rejection, rejection. Let's actually mark a key spot. We might actually go a bit lower than this zone here. Now if we're looking at the weekly chart, we can see the clear rejection here, another rejection, came back close right just above it. Next week we finally broke over it. So we could very well come down, retest this spot, 35.12, but I'm eyeing the 0.5 as a first bull entry. And this gets me so excited to just think about the opportunities that's going to be brought to us for February. And I messaged in the chat that most ideal scenario is we see a pullback, ideally, before the end of January, just based on the timing wise of what's the events to happen, because after January, February is RSP season, and RSP season is generally very bullish. So, but because of how we've ran for 60 days straight, in order for us to continue bullish, we're gonna need to see weekly higher low, and the timing of this could not have worked out better. Okay, end of January, we're pulling back, and pullbacks are generally sorry, I'm seeing a lot of generally. Pullbacks are faster than walk-ups, bull momentums. And that's why we say, or some people say, stairs up, elevator down. Stairs up, if we look at long term, stairs up, elevator down. Same here, same anywhere you look. Okay, stairs up, elevator down. So with the elevator coming down, Anticipation is it shouldn't take too long. I'm anticipating probably before end of next week, the consolidation will see a bottom. Then from there, we gotta watch for the action. Even if you were to just play this, you know, the first part of that sideways action, even if we're just seeing a sideways action, that's gonna be some really decent bull payments. People are gonna get paid, okay? But just make sure you watch for that reversal in case we do go into a sideways action similar to back here. All right. Nas. Chart's a bit messy. Nas clearly weaker. We have broken that GP by quite a bit, and we are coming back to visit this all-time high trend line. And what all-time high trend line means, there's a few ways to draw it because it's so far back here. So this is from 03, and the reason why we draw it is we can see a clear rejection from here, the high of the bounce, or the other way that I drew it was a clear rejection from February bounce, or a clear level here, rejection, support, support. So these three are all just notable long-term trend lines, okay? So we are coming back to revisit this for the first time since our break. We're gonna be revisiting this breakout trend line, which lines up with this key support resistance. So minimum anticipation is coming back down to visit this area. Bulls want to hold this area. If this is lost, there is plenty of further downside. First zone we'll be looking at, which lines up with the SPX, it's going to be around 12,409 to 12,466. And remember, we are trading under the daily 8, so use the daily 8 as your guide. Same on SPX. All right, Dow's clear weakness. After multiple rejections, we did not break into a new high as SPX and NAS did. So this was basically a double top. Okay. And I couldn't really find any notable levels. I wanted to keep Dow as a cleaner chart as well. So couldn't really find any notable levels aside from this level. And zone's probably a little bit bigger, something like that. This is going to be key level that we're going to be watching for a bounce from. On the Dow, it's going to be 28,918 to 29,232. All right. Interesting note is US 10-year over 2-year bond yield rate. We saw some crazy bull movement on, I believe this is Friday. Yeah, yesterday. 12.5% move. Broke over all sorts of resistances. And this is why it leads me to think that this consolidation that's happening in the market right now is only temporary. We will be looking at a nice bounce. Okay, if we were to have folded here, I would anticipate a little bit more further downside or a dragged out sideways action. And let's see if that lines up. When was this sideways action? September to November, beginning of November. September, beginning of November. It started running towards the end. So yeah, this makes sense. Yeah, long-term sideways action. Technically, this should be a leading indicator, so you could very well say that it was here that was indicating that we're gonna go sideways. Okay, but something to keep in mind: we are breaking bull on it. So would anticipate further bull action on the longer time frame for the markets. Next, VIX. We popped, but we are stalling in the resistance zone. If we were to see further downside in the market, we'll have a clear break of this resistance zone. Currently, no reason for exit on your hedge positions yet. One thing I did find, or not on this one, but if you are playing UVIXY, it doesn't respond to the daily 8 that well. So what you could do is play around with the EMA. What I found was this UVIXY on this particular move is responding fairly well to the hourly 10 EMA. Okay, we see closed just slightly under it, bounced over, wick, and came down, bought up again, and now we're working from the hourly 10 again. So, you know, if your 8 EMA or 12 or whichever you're using doesn't work on particular chart, play around with it, find something that works, and use that as your guide. Okay. Next, gold. A clear rejection from the previous bounce high. Yeah. Decreasing bear volume after increasing bull volume, but significantly higher bear volume. A clear trend line to hold for gold bulls. Watch for this trend line. Other than that, nothing very notable. We are trading. This is already huge upper wick. Alright, clear trend line on the daily to hold. That makes a little bit more sense. Looking a little bit more bearish than bullish. Finally went up, bounced up to the resistance. Huge rejection, got shot down, still trading under 88. Looks like a lot of sellers on gold. And if you play this whole run, if you had physical gold, if you bought gold somewhere when it's low, it's sideways action for the longest time ever, you'd be up decent. You'd be up very nicely. So make sure to take profits along the way. When this movement happened, I was in gold, and I think I sold. Oh yeah, I did market. I sold right around here. Wasn't something that wasn't something that I was planning on holding a long time just to see even further profit anyways. And I'm okay with myself because it has been, what is this, 50%? Let's see, 45% run, no complaints. I mean, did miss the big run, another 20%. And if we see right now, the clear support is down here. This is clear rejection or previous rejection, now support. So key price to hold is 1771. Easy price to remember. US dollars, not as strong as anticipated. We did slightly break over the resistance zone, but got shut down right after. Still trading over the 88, so that's nice. It is looking bullish. But if we do not break over, and this might be dependent on what the market decides to do, if we do not break over this upper trend line, market bounce will likely begin. Keep a very close eye on US dollar DXY. It tends to be a much closer term leading indicator than the bond yields. I believe the last time I was looking at this, I can't remember the exact spot, but once the US dollar started dropping, the market just went. And then once the US dollar bounced, maybe it's somewhere back here, this is the only noticeable bounce. Once the US dollar bounced, market a few days later began dropping. September, actually, yeah, this makes complete sense. September 1st. And if we were to look at the drop, September 3rd, 2 days later, right? Then from there, we just bounced up. So keep an eye on US dollars. It's a very nice leading indicator. And timing wise, it works out so well because last time it happened, as I said, 2 days before. So make sure to watch US dollars. Next, Bitcoin. Still in that channel, saw a very nice pop over, a huge rejection coming down. Not a good sign for bulls because this is notable bull volume, but we got shot down. So still watching this channel. Overall on the weekly, is still a bull flag. We are still trading over the weekly 8. What a nice spot to bounce though, hey? Look at this. GP, right at the low end of GP, 2880. Then we're bouncing from the mid end of GP. Bull volume coming in. I believe this move was a little bit earlier than anticipated. Maybe not, but the chart wasn't ready. It was nice bull divergence at the GP, so made sense that we're gonna bounce. Can't remember when I covered this 2 days ago, but I had this bull divergence drawn out already at the GP, so this bounce made sense. But now with this huge upper wick, it is a red flag, because now for us to break over this resistance zone and this bull flag setup, this channel setup, we're gonna need a even bigger volume for a convincing move. Note that we are trading over the 88, so chart is overall in bull's favor, but we're gonna want to see those two breaks, these two areas broken on volume, ideally today. Want to see that follow through today, or else this red flag is gonna confirm. All right, actually, let's add oil in. We haven't watched oil for some time. Sideways action. Less bear action than anticipated, but it is still sideways action. We'll likely drag this out for a little bit longer. Seeing some upper wicks form, so caution for bull players. Lots of upper wicks around this resistance zone, and now we're seeing upper wicks below the resistance. Looking a little bit more bearish than bullish. If we were to break this trend line, we'll be looking back down at the retest. Nope, that's already been retested back here, so does not validate. Next level to retest will be around this previous high. All right, let's get into the hottest tickers. Tesla. I can't remember who was it that messaged me. Let me take a quick look here. And I do apologize if I'm pronouncing your name wrong. Sono messaged me a couple days ago on Tesla after this big drop, what my anticipation for Tesla price action is, and my response was, right now we are under the 38. Oh no. Yeah, rejection from the 88. Increasing bear volume. Chart was looking a little bit more weaker than what bulls want to see. Then we saw a bounce following the earnings, which made sense because it was a huge drop. Pre-market, we went down as low as just below 800. So that was a 7% drop just in after hours alone. Then from there, saw a bounce and rejection, or didn't even come close to touch the 88. Now we are seeing a confirming candle on bear volume. You can see that back here was decreasing and there was a wedge. So this lines up with a wedge setup, and then we had a pop, but now it's looking now it's confirming that fake out breakout fake out. We are seeing an increase on bear volume, so be very cautious. And we did close under the 800. Okay, my anticipation is we will be looking at a back test or a gap fill from back here that we left way back here. This gap is gonna fill around 740, but before then there is a notable trend line, so watch for the reaction at this trend line. I would anticipate that we're gonna break under it because this is only the start of bear volume. If we continue to see increasing bear volume, this trend line will be broken easily. Another scenario that could happen is we come down, we break under on volume first thing Monday, wick from 740, and then close right on the trend line, 770. Very possible scenario. But if you are in the bear play, use the 88 as your guide. This will likely drag out for quite some time. Not gonna say that this is back here was the top and this is it for Tesla. No. Just go on Reddit. Look at what happens when people short Tesla. Don't short Tesla. This is just a consolidation. We needed the weekly. Look at this weekly. We needed a higher low. Same with SPX, right? Since the run started, the SPX uplisting news came out. We have not had one single touch on the weekly 8. Not even a single touch. Okay, and we have ran 117%. So if you had 100 shares of Tesla shares back from this 400 spot, so 40,000, your 40,000 is, depending on where you sold, will be up to 80,000 already. Now that 40,000 difference is a lot of people's salary, 1 year salary, right? 1 year salary that you could have made in 7 weeks without doing anything. You buy this, and I'm gonna come out with a video on my first trade. It's what got me into trading, and because of that, you just buy something and not do anything, and you can make, there's good profits to be made as long as you buy the right thing, of course. But yeah, regardless, watch for a reaction on this trend line. We'll be looking at gap fill. Okay. Next, now I don't have my list pulled up anymore. Apple. Clear trend reversal. Not yet. Clear bear action. Increasing bear volume. Trading under the 88. Closing in that previous support zone. Support resistance zone. Again, I want to see a hold of 131. But if 131 is lost, we'll be looking at back down here around 126, 127, 126. Okay. Likely to see a little bit further sideways action or downside. Ideal entry would be back here. We will be getting close to that oversold on the shorter time frames if we do reach here by Monday. Next, Amazon. Loving the setup. Loving the setup. It is not correlating with the market. It's clearly a little bit stronger. Well, holding up a lot better than the market. And for those of you that watched the video yesterday, Thursday, yesterday is Friday, yeah, Thursday, you will know that I'm now in Amazon. I'm back in Amazon. In the video on Thursday, I mentioned that we'll be looking at this zone, this GP, which lines up with the inner wedge. Yeah, which lines up with the inner wedge. Price target 31.85 for entry. And look at that. We came down as low. I still have that note right here too. Right here. 31.85 entry. Okay. And we came down as low as 31.84.55. Off by pennies. Few pennies. 45 pennies to be exact. Then from there, saw a bounce. A nice area for bounce. Now, what we want to see is a reversal. Potentially, at least, give us a curl sign. This is a, understand your entry. Okay, this is a small entry because look at the previous days. Bears clearly still outweigh bulls. This is more so a earnings play. What I'm looking for is a run into earnings on Tuesday. So it's very short term. Then most likely selling before earnings. But this was an ideal spot to bounce from. I am looking for that run into earnings following very bullish action on earnings. Okay. And this could be the cause to drag the market up. We have been in a wedge for, let's just say, sideways action. We've been in a sideways action for 141 trading days on Amazon. 141 trading days. And that's after 119 trading days of over 100%. So if you look at this on, let's check out monthly. Look at monthly. Look at this on the monthly. Okay, a very clear bull flag. Oh my God! Once this breaks, if the bull flag was to confirm, this move is gonna be amazing. I can't emphasize this enough. This move is gonna be amazing. Keep your eyes on Amazon. Look at now. Ever since where is this? November 1st, when the market started running, we have not had one single month close under the monthly 8. The monthly 8. Oh, first time saying that. But yeah, bounce. We dip, got bought up right away. Same idea, dip, bought up. Not even close to touching it. Still haven't touched it. Even on this wedge, this is a strong bull flag. Not touching that monthly 8. Decreasing volume, ideal setup. Okay. And I will be sharing this this chat with some of a closer friends, family. This is actually my first time looking at the monthly chart. Amazing setup. My God, guys. Keep your eyes on Amazon. All right. Next, PLTR. Loving the chart. A little bit more bearish than would have liked to see. Relatively low bear volume. It's a nice setup. We did break under the 4-hour 8, and we did break under the trend line. Little bit of a red flag. Took profits on it. Yeah, took profits on it once I saw this chopstick top. And we are trading under the hourly 8 and now under the 4-hour 8. Could see a little bit more consolidation. Yeah, could very well see a lot more consolidation. Chopstick top on the daily, lots of profit taking, which makes sense after a 74% run, right? People want to take profits. Use the daily 8 as your guide. This trend line is now likely going to be serving as a resistance instead. We're likely to come down to the daily 8, then sometime in the future back test it. Chart as of now on the shorter term is looking a little bit more bearish than bullish. And let's find the target. This target makes sense. 33.5. Yep, this target makes sense. A clear run before another back test on the daily 8, and we can see a support around the GP2. So this price, I would be eyeing somewhere around there, 32.65 for the wick to form, the lower wick. Price is looking nice. The chart is looking nice over the long term, still bullish, as long as this GP does not break. GP must hold. Next, nope, we are on PLTR, Zoom. One of my other top watches, aside from Amazon. Back in the trade, look at this nice GP wick. Nice golden pocket wick. Alright, so this obviously just dropped from the low to the high. We came back, wick the GP. Let's go to the shorter time frame. People were getting worried about this trade because if you look at how long the sideways bear, or how long the bear trend has kept up, okay, it's clear bear trend still. People were starting to get worried, but GP was always the spot that we were eyeing. So got back in the trade right on the GP, and then we started seeing increasing bull volume. Not convincing yet. First thing we were gonna want to see is a break of that 4-hour 8 on volume, on nice bull volume. Ideally Monday, Tuesday. I would imagine it should be before Tuesday, but decreasing volume lines up with a setup for a daily bull flag. Nope, broke under the daily 8. Weekly bull flag. Nope. All right, no bull flag. Just a nice bounce from GP. Now let's see if this inverse head and shoulder works out. We're gonna have to see a break. This one doesn't work anymore. Might come back in the future. No. Alright, so I like to use this as trend line. I want to see this break Monday, Tuesday, by the end of Wednesday at the latest. I want to see this break of this trend line, close over it on bull volume. Ideally break this one as well. Might as well, you know. This could be this could also be the neckline as well, but this is 1, 2. No, actually this can't be the neckline. This one's just a resistance trend line. This is the neckline that we must break. Inverse, left shoulder, head, right shoulder. Let's see that break before Wednesday. All right. That's it for today's market deep dive and hottest tickers. I hope you guys enjoyed the video. I hope you guys enjoy the contents I'm putting out. If you are looking to get out of debt or build that first pot of gold, make sure to hit like and subscribe button in order to get updates on our new videos that's being released daily. Also, make sure to check out our website for that 7-day free trial to our chat room. Currently at 85% success rate call-outs. Our website at totalcontroltraders.com. Hope you guys stay safe and be in control. I will see you on the next video. Thanks for watching, guys.